This morning we're joined by the CEO of NewOak Capital, Ron Davari, who's joining us bright and early this Monday morning. Thanks for being here, Ron. Any reaction you think in the markets based on what we saw on healthcare over the weekend?
No, I think, as you mentioned, it was pretty a wimpy pass. And
wimpy pass, Sarah.
I don't think that was a direct quote, but...
and I think, as it was pointed out earlier, the Senate is going to definitely, it's dead on arrival, it looks like, it, as it stands.
Or dead on the current version. In other words, you're going to see some changes in it,
exactly. Absolutely. And I think, the market is not really very much focused on this as much as obviously the politicians are. This is something Obama has staked out and he wants to get it through. But the reality is that the solution is going to be somewhere else in terms of cutting costs in healthcare. You really need to have the doctors and the patients get educated, and that's what we need to focus on, because I think that this bill itself is going to have a lot of problems getting through Senate. As it is.
It seems like Joe Lieberman now holds the cards in a lot of ways, because as an independent and somebody who still caucuses with the Democrats, he can hold it up. So what if something gets done, and the betting in Washington still is that something will pass. What will it look like? It'll be without public option, a watered down public option. What will be the key differences,
I
do you think?
More likely watered down, because that's probably politically more acceptable in general, because there are people on the other side that are not going to accept not having the public option. Yeah. But the same thing happened in the House. They ended up watering it down, and then maybe watering it down even further. You have the opt-out right now that was put in the House version.
Right, and there were key compromises on abortion and other things at the end of the day on Saturday night. Okay, Ron, we'll have more from you throughout the program. Thanks, Ron Davari.
All right,
let's talk about it with Ron Davari from NewOak Capital in an instant audit this morning. The other thing, Ron, is even if they do get it figured out, and even if they do have themselves a deal, is it okay with antitrust regulators that the largest cable company of the United States has a controlling interest in some major media content the distribution channels?
Obviously, they're going to have to get rid of some of the stations. That's one of the things on the table as well. I'm pretty much sure that was part of their discussions. They're really getting ready for this transaction. This transaction has been in the works for, quite some time now.
Oh, yeah.
And the valuation was kind of interesting, but I think that was a major deal point, and that's actually good news.
I was looking, Bernstein Research has estimated that of us watching TV, that 1 out of every 5 viewing hours, would be attached somehow to Comcast if they actually go through with this deal. Talk about what it might mean for the market, because every time we see General Electric report, the one headline, one of them at least, is looking to see what they're going to do with NBC, because this has been rumored for months and months and months, if not years.
Absolutely. I think GE needs to essentially consolidate its business, make sure that obviously finance has been a big issue with GE, and they've gotten a lot of hurt over the last year or two. They're going back to the core business. They're obviously trying to raise some cash.
So you think this would be a positive, that the market would maybe rally on news like this? Would it
I
have
think
a
so,
effect?
because I think they want to see a more concentrated, more focused GE, focus on core products, perhaps reduce also its reliance on finance as much, and go back to its roots. And that would be a good positive event for us.
Yeah, and they had a couple upgrades last week, and then GE did help the entire market that particular day. By the way, I hope the other 4 hours are watching some News Corp-owned properties, hopefully.
As that should be.
As it should be, yeah.
Right. That's interesting facts. All right, we're going to move on. Thanks, Ron. Ron, we're going to talk a little bit more about the consumer coming up. When I mentioned this deal.
Now, retailers hoping there's more nooks and crannies and everything else for the holiday season. They're hoping to defy the negative momentum that the earnings expectations will improve. We'll see whether or not they improve. The big question at this point is what we can expect from holiday shopping as we enter the fourth quarter. Where is consumer spending heading, and how are companies preparing for some more frugal customers this holiday season? Ron Davari, who's not frugal, from NewOak Capital, where he's CEO, is with us this morning. But that is, actually the Journal wrote up a big article about kind of this new frugality, that it's a new reality that people have to deal with if you're in a consumer or led business and you're relying on the consumer. Is that true, do you think, or are people going to open up and spend this season?
Well, I think people are watching their pocket. They're concerned. They're not. The job numbers obviously somewhat confirm that. Whenever there's uncertainty, People are not really sure about their jobs, so they're not going to spend as, but retailers are going to come up with a lot of tricks. They're going to get them there. And
okay, but even this NewOak, though, it's
right,
$260. I mean, it's not cheap, and
No,
the
it's not at all.
pre-orders are so big that they're going to have to wait longer, the customers, to get it. So it's confusing, the message somewhat we're getting for consumers. How are you viewing that as an investor?
Well, I think the bottom part of the sector, the consumer, is not spending, obviously, because they're most affected by the job numbers. But the market has done phenomenally well this year, so we're supposed to get better sales this season than last year. The stock market, as you mentioned, how many highs did you mention this morning?
For gold, right?
And that really does ultimately change the sentiment of the consumer at the end of the day, when they feel a little bit richer than they were last year.
It's funny,
so
if you make a product, right, and
sure.
that is a really good product. I mean, sure. Apple's proven this in recent years,
Absolutely.
and maybe, who knows, maybe this NewOak is another one that is a good example of that. And people are going to shell out the money for it. But the other story we've had a lot in the last few weeks is, to your point, at the lower end, all these price wars. The books, remember we keep joking
DVDs?
around DVDs, that
right.
books and DVDs are going to be free, for goodness sake, by the time they're done with, because they keep cutting up $9 and whatever it is. So that kind of stuff, you think will keep going on?
I think that's true. The commodity items are going to have to be a lot more competitive. People are going to have to cut costs, and it's going to be a very volume driven, and you're going to get the people in the store to buy them. Just like what Walmart did, essentially, the items that they put out, what was it, the $10 items?
Right, that's what we're talking about, yeah.
They're going to try to sell that, and it's like those bookstores, everything for $1, you walk in. But on the other side of it, the creative retailers are going to come up with products that are going to get people to spend money. So it's a good thing. You're going to have a barbelled situation, and new products are going to sell.
Okay, Ron, thank you very much. She'll be with us, Ron Davari, in our internet show in the next hour. And I'm sure I miss it. Ron Davari, thanks for joining us this hour. I know you'll be with us on the internet show. That's some story, by the way, right? That kid saving the day down there?
Incredible.
Charleston. And markets are looking how, do you think, as we enter the new week? I mean, it's amazing how strong we are this morning in some
I think it's not that amazing. The G20 news, the fact that the employment actually came out, the unemployment came out weaker, means that the punch bowl is going to be out there. It's going to be there. Party keeps going. I think the market was actually a lot more nervous that the Fed and others, the three central banks were, they came out with the statements that ended up being positive and negative, and that took the volatility out of the market and continued the bullishness that we've seen.
And that's what we see this morning with Dow futures up more than 80 points. It does it for us on Fox Business Morning.